Does psychology actually matter in trading? Well, 90% of trading gurus tell you that you need to meditate and fix your mindset, and that's how you're going to get profitable. But for 98% of traders, psychology isn't the real problem that you need to solve. In this episode, Petmer and I will reveal what actually separates profitable traders from the rest based on our experience for trading for over a decade. By the end, you'll understand exactly where you should focus your energy instead of chasing psychological quick fixes that won't actually change your trading equity curve. Let's get straight into this week's episode. Does psychology matter in trading? I think is a really heated topic, and anytime we've tweeted about it on Twitter, a lot of people like to get mad on both sides. So I thought it would be a great topic for us to discuss kind of in length, and I think it'll be the main topic-ish of this episode because there's a lot of different factors, at least in my opinion, that go around it. But what do you think first, Pedro?
That's one of those topics that people get very religious about, you know. It's like almost discussing politics or something in trading. It's a similar thing. And it's like, no, I don't think it matters. I'm sorry. Because let me just cover like 90%, 95% of psychology, like content that is available. All of it is to, how can I say, take you away from your real problem in your trading, right? If someone that is selling you a service is telling you that the problem is not you, it's your psychology because you are not disciplined, because you are not well, you didn't do your meditation that morning, whatever they say, they take you away from the real problem that is you don't have an edge trading, right? But there comes a time, and this is where I give some allowance to that. There comes a time when you truly have an edge, you have been executing for years, and it's now, for example, time to scale up your size, and you start to having concerns about that. And then maybe I can say that, yeah, it's some psychology that you have to detach yourself from the outcomes and stuff like that. But the problem for 95, I would say even 98% of traders is not psychology. And you can throw away all your psychology books and it won't make a difference. That's my opinion. What do you think, Munir?
I think I agree to some extent. I do think you're more talking about, I think, the early stages. I think psychology does matter more once you've discovered an edge or found an edge. But I do agree in the beginning start, it is a very easy way for a lot of people that sell trading to easily shift off a ton of problems and just say, hey, that's psychology, which I think ultimately is just not true. A lot of it is that you actually need something that works repeatably, something that's actually efficient at doing it. And that can be, as we've discussed in other episodes, like it could be a risk premium. It could be an inefficiency if you actually found like some true alpha. But either way, you need something that can be proven that it actually does work. And then once you have that, I think it is a decent amount of psychology in the sense that how we always talk about how it's difficult to manage drawdowns. Like a lot of trading after you have an edge is just managing drawdowns, managing position sizing, your risk tolerance, all those sort of things. And a lot of that can be more encapsulated with a bit of psychology of being able to truly just hold through that pain in essence. But also I do think a lot of psychology comes a lot easier once you have something that you can see is actually working, or if you have an edge that's actually working, because when I've actually had data on a strategy, it kind of feels in some essence stupid to not stick to it because hey, over enough trades this should work out, especially if it's like a risk premium, right? Like it would feel stupid for me to stop trading my trend following model because it's got a drawdown for a couple of days. Like I know that's just inherently dumb because of the data, so I never do it. So I don't have that like psychological issue with it. But if I was just trading a strategy and I didn't know any data behind it, I didn't know if it was a risk premium or if it was an inefficiency and it stopped working for a couple of days, then maybe, yeah, my psychology could get in the way and I stopped trading it. But that's ultimately because you don't have enough data to make a solid decision. And then the only other part that I'll say psychology is important about is execution. And that's why like I've taken myself out of execution. I think if you're trying to execute on a very low time frame and a lot of trades, which most of the time anyway, there's very little edge there anyway. But if you are trying to do that, that's probably where it's very difficult to execute manually and be very consistent on it because you'll have a lot of swings in P&L. And those are where I've seen prop traders excel because if they are good at managing psychology there, then they can be very good as like a, in some essence, like a manual market maker in some ways. Would you agree or no?
Yeah, I mean, but you are talking about, in my opinion, already people, traders that have achieved some success, like you said, they have edge, and some of the elite, like manual traders, and those are fine. I wouldn't argue that you need some strong psychology to handle like multi-million-dollar swings and be okay with it and still execute if you are doing it discretionarily or with some data, but still being, how can I say, semi-discretionary with your decisions, and that's fine. But for 98% of traders, probably even more, people are just trying to take you away from your real problem, and that is you don't have an edge. And no, it's not your psychology. No, it's not your discipline, just that you don't have an edge and you are trading randomly and paying fees, making the brokers happy and making your counterparties, whoever took the other side of the trade, happy. And it's good. Psychology is one of those good book sellers and course sellers because it keeps you on a loop and keeps the blame on you because they don't have to teach you anything relevant. They don't have to give you an edge. They just can keep you saying it's you, it's your discipline, it's your meditation, morning, whatever, and not fix the real problem. After you have that edge and you have a system, something that works, and you continue, let's say, to not be able to execute because you are afraid to lose money, you have other psychological problems, then you can start work on that. But most traders are not there.
Yeah, I would definitely agree. I think a mental model that I always like to do, and that's kind of what I'll be doing in this conversation, is I like to play it on both extremes, right? Like on the extreme where you're very new, I totally agree. Psychology doesn't really matter. And on the extreme where you're managing millions and you're doing like hyper scalping, then yeah, psychology I think matters on execution. But I do agree, for most people, it's not really going to affect them. And I also do want to say that like, I think a lot of people sometimes don't like this topic because they're doing it themselves. That they're thinking psychology is really important, and they kind of see it as if someone says this, it's kind of like we're belittling them or we're talking down to them. And I think that's furthest from the truth because I used to be a person that used to meditate before trading. I used to, take 10 minutes or whatever and meditate. I thought it was going to be a thing that would help. In my first early months, when you look at YouTube and you look at day trading, so much of the stuff out there is, hey, have a peaceful mind coming into the day, meditate for 50 minutes or whatever, do whatever this, and this, and that will help you be better as a trader. But ultimately, that doesn't really matter in any way because when you're new, you don't have an edge, as we're kind of talking about. And I think there are things here and there that can help with making better cognitive decisions. Like I did find when I used to work out in the morning, it was kind of nice. It kind of already had me awake, like scrolling out of bed and then trying to execute trades. That's a bit of a different thing. You can even make very classical mistakes just because of being, just waking out of bed, for example. But for the most part, I'd say, yeah, I agree. 90% or so is just edge.
Yeah. And to be honest, when I thought those things, it was actually nice that some people made fun of me, because it woke me up. Like, stop doing that, stop thinking about that, and focus on the real problems that you have, and that is you are not trading with an edge on your side. And once I stopped focus on those sort of arbitrary or abstract concepts and start really solving the operational issue, which is I don't have an edge, then things started changing for me. So I'm not here like just, how can I say, like just talking about it is what I went through it, and I think you too. So
yeah, 100%. I think this kind of goes into the next topic where it's very closely aligned, as I did a tweet about it recently, of that most traders think discipline is their superpower or that's what's going to make them kind of profitable. And ultimately, what at least my take is, obviously edge is number one there, but two is that if you execute poorly, even with like a bad strategy but perfect discipline, you're not going to make any money. So if you have a bad strategy but you don't execute amazingly, like how I did in the first, I guess it would be like the second year of small caps, I wasn't a very good executor of trades. I still am not really, but I was still able to make money there because the edge was so apparent, right? Like most days, you didn't really need to execute perfectly on small caps because I could just click short sometime in the open and I'd make money. Now, that obviously comes with a con that if you don't execute consistently, then you may blow up on the days that doesn't happen, but you could still make money there because there's an edge there. If I was just executing poorly on some strategy that had no edge at all, then it would be very unlikely for me over a long enough period to actually make any money at all. So I think that's one thing that's more important when you look at it. Edge is going to be the controlling factor there, even if you execute poorly and you don't have, the perfect discipline or the perfect routine or whatever.
Exactly. To me, it's once again focusing on the wrong things, right? It's like like for example, the trend model that I run, I was just talking to a client about it, and he was asking me, "Oh, should I execute like we were talking about the daily model, and he was asking me, "Oh, should I execute at midnight UTC or 1 a.m. UTC?" And I'm like, "Man, if that decision truly affects your P&L in such a way that completely makes a strategy different, you don't have a strategy, right? All the edges that I trade, you can execute them the next day and be fine. So you can still have an edge and execute poorly, and you'll do fine. We all seen those traders like that smoke, drink, do everything wrong, and come to the job and just execute and whatever, and probably are more profitable than I'll ever be because they have a true edge, whatever that edge is. And others that don't have an edge and do everything perfect like machines don't make money because they are focused on the wrong things. And you are on the market to focus on providing a value and doing a service and getting paid for it. That's what you do.
Yeah, completely. And then to shift topics a bit, my next point that I wanted to talk about was that retail versus like professional or institutional trading is really not the same game. And I think a lot of people like to look at what hedge funds or what hedge fund strategies they're doing and things like that and trying to discover them, thinking that that's what they're going to replicate for themselves. For a very large proportion. I'm not saying hedge funds don't have like their own alphas that they exploit and things like that, and especially in other markets where they can, where normal retail traders can't. That's definitely still apparent. But for a lot of their strategies, they're focusing on very low margin things on massive capital, and that's how they're making their very high returns, at least in P&L wise, right? Compared to retail traders, most of the time we're having to either jump around into different spaces that have edges, or we're playing games that don't require that much size and actually have a limit of how much size you could actually push through, and that's normally why it hasn't been arbitraged away. There are also risk premiums as well that you can just do anyway, but you're not going to make crazy P&L returns on those unless you're applying leverage or applying it on like a more volatile market. But I do see too many YouTube videos at the moment where it'll have some crazy title like this hedge fund or this Citadel strategy that you can copy, and it's just like most of the time that's not going to be the same game that you need to play. And especially a lot of times, a lot of people especially miss it when they see large orders and large option contracts that are being taken out. Most of the time, those are just hedges. Most of the time, if there's a very large option contract that's been taken out or things like that, it's not because someone's predicting a particular market of that. They're hedging against some other position that they have. But anyway, what do you think about Petma? Do you think in the same way?
Yeah, it's definitely, of course, that's definitely different games. In terms of the retail trader, I think it's like you said, it's more about where you can play and where those more sophisticated players can't. In my opinion, we talk a lot about that, and you can take capital and go to a market that other more sophisticated players can't, and you can just adjust yourself like that, and it's much more flexible, let's say, where the other players are probably competing at the higher capacity markets and at scale because they can hire PhDs, the best engineers, the best computer scientists, whatever, and they can compete on those spaces. But you as a solo trader you won't be making do market making on the ES mini futures, right? I doubt you can make it a profitable business. But maybe you can do market making on a second-tier exchange, on a crypto exchange, right? On a crypto second-tier exchange. So that's the advantage and how I play as a lone operator on non-professional way.
Yeah, no, I totally agree. Have you been exploring any kind of like unique edges recently? Obviously, you don't have to give them away, but like, has there been anything unique that you've been exploring?
To be honest, I've been trying more to scale back on that because I'm trying to. There's a few inefficiencies on my trend models, and now I'm focusing more on that and running whatever I have, the stuff that we were talking about, like funding arbitrages and stuff like that on the side, but focusing more on my trend models. There's some inefficiencies there that I need to fix, and I was spending a lot of time investigating new edges and stuff like that, while at the same time my trend models weren't as efficient as they can be.
No, that makes sense. Like optimize the time for something that's actually going to be the most ROI most of the time. Because a lot of those
Exactly.
funding arbitrages take a lot of time, and depending on them, you can make a decent amount of money, but they are pretty intensive.
Yeah, no, I'm still running those. I'm just not trying to find other stuff like aside from funding arbitrages and stuff like that and yield uh, type strategy. But for example, I was checking in my P&L for this year, for example, and what I noticed is that most of my P&L comes from my strategies and some discretionary buy and holds that I've made. So and then I'm allocating, I don't know, a bunch of hours each week to strategies that have not yielded a large percentage of my returns. So I need to start focusing a bit more. And when I have more time to go again fishing for new ideas, I'll go for it because I get bored. But until then, I need to fix a few stuff on my main models. What about
True.
yourself?
Yeah, no, like apart from just managing my current futures portfolio, there hasn't been much else that I've been exploring. I've still been looking around in crypto. There's a couple of ones that I'm still testing out, which seem to be working quite well. But overall, at the moment, it's just a lot of volatility you got to handle. There's a lot of drawdowns rapidly and a lot of P&L changes that I'm not always as used to compared to at least like Biden's market. So that's been the main thing of focusing on that. And then secondly, I'd say I have been working on trying to add new strategies. Most of them at the moment, I have hit quite a hard roadblock of that any strategy I try and make for my new for the portfolio just either is super correlated to other ones that I'm already running, or they're just not really adding much benefit to the actual portfolio. Maybe they add like a percent or something onto returns, but they're adding basically the same on drawdown. So it's overall not as much worth it. So I've been hitting a roadblock on that. I've just been experimenting with different ideas and consistently researching. So I've been trying to at least look around on Twitter. I've even purchased some people's things to see what they're kind of working on and see how that explores. That does actually give me a small side topic of that. I think a lot of people are a bit stingy with paying for information. I think at least when you're in the beginning stages of trading, obviously you have a lot less capital, so you don't want to spend on all these people's courses and things like that. But over time, it actually can be a really kind of plus EV thing to do, because it's a one-time purchase most of the time, and you get to consume a lot of their info that they've put out. Now, obviously, your hit rate on it is going to be kind of low. A lot of people just put out a lot of kind of garbage. But if you can try and filter through, some people can actually have some super solid ideas. Like I saw a Bollinger Band sort of strategy that I've been testing on crypto that's actually been working quite well. And that was just basically stolen from another person that was tweeting about it. So when you can, I think it can be useful to kind of pay for that sort of info.
No, yeah, I agree. It's just hard because I'll add the caveat when people are new, they they don't really know who's legit and who's not. For example, if I bought a bunch of stuff at the beginning from all of these people, I might have uh, hurt a lot of my trading capital because I bought a bunch of useless stuff from a bunch of people. So I would say to get some like I don't know, to get some experience, I would say. First, like be on Twitter, be on social media, check who's actually making money or not, who makes sense. And then if they have something to sell to you, if it's not too expensive or something like that, just go for it because it can save you literally years down the road, you know? What like what would I have paid to have someone like us? Okay, this might seem a bit too salesy, but like someone like us that has a bunch of years ahead of me, and how many years could I have saved? That's what I
Yeah.
think.
No, I agree.
Yeah.
It's one thing. I don't know how many other people think about this, but I would love to be able to see like the Monte Carlo simulation of my life to see like what other decisions would have led to different routes. And the reason for
Yeah.
that is because there's been small things I've heard from people here and there from traders ahead of me that I can't quantify how much time has saved me, but I know it saved me a good amount of time. And that is a very difficult thing to do because I want to be I try to reinforce myself on making those decisions because you're totally right. Learning one or two things here and there can save you a lot of time. And at least how I like to look at it as like I guess an accounting way of doing it is like most of the time these courses or whatever I'm purchasing from someone, whether it be a newsletter, for example, it doesn't have to be a course. Most of the time it's a one-time purchase fee, and that at least when you scale up your capital, that purchase cost is often a very small percentage of when you play out if that strategy works on a long horizon, right? Like this
Yeah.
Bollinger Band strategy, I don't know this because obviously I've only started running it, but let's say I run it for a couple of months and it continues to work for a couple of months, it'll probably pay me 5, 10x of whatever I paid for the newsletter thing. Now obviously you're going to have ones that don't, so you're going to have to take some hits there, but when you do actually find something that sort of works, or even if you adapt it or apply it to another strategy or whatever, I think can always work. And that's also why like buying books, in my opinion, is really not a bad idea most of the time. Like obviously you'll get some books that are just completely terrible, and then you'll get other ones where maybe you find 1 or 2 pages that are super solid, and you get to get a lot of ROI from them.
Yeah, completely agree. Completely agree. It's always about like, for example, let's say on the high end, even like let's say that you have a course that is €1,000 and let's dollars, and so let's say that it is from someone legit. Even $1,000, like if I spent that at the beginning on a good course, and I didn't have, how many thousands of dollars have I lost in the market doing dumb stuff, you know?
Yeah, that's how I always think about it. Like I spend way too much on commissions now, so like a lot of time it just looks like, hey, why not do it, you know?
Yeah, and I'm like, but it's hard because if you notice, I'm not being too confident, like saying things extremely confident here, because there's a caveat. The new traders don't know who's legit or who's not, and there's a bunch of fake people out there these days. And so it's hard for me to say, like, buy from everyone you see. I would argue that you should buy from people that make sense to you. And that making sense on it is gained through experience and over time.
Yeah, no, 100%. Do you want to go over your last point?
Yeah, so it's more about sizing is an edge of itself, on itself. So as we are talking here, I'm thinking about my own sizing strategy, if it's truly optimized or not, because I've been experimenting with a few different things here and there with my portfolio. And it's like that. I have something that works for 2 years, right? But I think there's a better way to approach allocation. But that new way brings a lot of like uncertainty, right? I've run this model for 2 years now, live. It's money on my account, and it's kind of hard to make any changes, and changes that are not very certain into the future. So it's something that I'm dealing with, and sizing can definitely be an edge, let's say, or your own edge, because if you size too much, you'll end up destroying your portfolio. But if you size too little, you'll leave a lot on the table and you'll be inefficient with your capital. So it's really about that middle point that you have to find for yourself, and it's really hard when you are in the game, in my opinion.
Yeah, 100%. I would say if anyone's looking for some good resources around this, as we kind of just talked about, I would recommend Robert Carver's books on, I think it's leverage trading, and I think the 30 Advanced Futures Trading Strategies also goes over it a bit, but he goes over a lot of the ideas of how you can have, my apologies if I butcher it, but it's primarily like a confidence score on your signal, and then you can basically size to that confidence score. And I think it's a great way. It's basically like an ensemble method, sort of, plus also adding continuous signals, kind of like how you've been trading recently. And if you can size based on that, then you can get exponentially higher returns on, you know, trades that are higher confidence in quotation marks, without it being a discretionary element of saying, oh, this trade looks good, that's why I'm going to size 2x. It's more of a quantifiable way of doing that. And it can be, you know, it can take very simple premises like a moving average crossover or things like that and make it a really high return strategy through the sizing itself. You don't need a very complex strategy. The kind of, I guess, more complex part can be through the sizing.
Yeah, and I'm running it, the same model on one of my portfolios, and that's fine. It's actually quite good. My only question right now is running the same idea, the volatility targeting one, but on a binary model. It gets a bit tricky there, and I'm still trying to solve it for myself. So you can do it. It's like at the beginning of the trade, for example, you have let's say Bitcoin, it is at 50% annualized volatility, and you want to target 50% volatility, let's say. So you size it full portfolio there. The problem is, if you just have one position, should you size it just for that one position, like the volatility matching for that position, or should you size for an hypothetical future 20 positions that you want to hold? And there's questions like that get very into the nitty-gritty of the positioning is where I think efficiency lies, because on the first, like on one part, it can really like be safe just to allocate, like assume that you want to have 20 positions at all times, and so you always divide 20 like your risk allocation by 20. But then on the other side, if you do that, you will never match the volatility that you want, because on a binary model, you can spend a lot of time with very little positions or no positions at all. So your volatility target will never be met. It gets a bit tricky. I don't want to be getting into the whole details to not get boring. But yeah, edge can definitely be an edge, or can work against you if you allow it.